So how do you know that a stock is a good candidate to be a winning trade? How do you know when to buy and when to sell? Well, people ask me this question all the time. It's the number one question I get, and I never want to tell them because it's so simple. It's like cheating. But you know what? I'm going to give you this indicator right now. So simple. It's like cheating. Can't believe I'm doing this. Let's go. Hey everybody, it's Jeremy Whaley here from Trade Maestro. Hope you're doing fantastic today. If you haven't done so already, check us out over at trademaestro.com and like and subscribe here on the channel so you can follow us with everything that we're doing. Today, I am pulling the curtain back. I'm going to give you my secret weapon. It's really not a big secret. The truth is I've given it away before, but I'm going to give it to you. And what you'll be able to do with this information is pick a winning stock. So how can you pick a winning stock? Well, first, before we get there, let's ask the question and answer the question of how do you actually make money trading stocks. A lot of people think that you should buy and hold. A lot of people think that you should be looking for fundamental information and find a stock that's undervalued. All sorts of misinformation that's been taught to you in the past. Here's the reality, folks. If you want to make money trading stocks, and the kind of money that I'm talking about is the kind of real money that you can use and actually buy food, pay for your mortgage, buy clothes for your kids, stuff like that. The only way to do that is to actually sell your stocks. So buying and holding doesn't do it. You have to buy and sell. And what we want to do is we want to buy low and we want to sell high. This is how you make money in the stock market, buying low and selling high. Now, of course, the million-dollar question is, how do you know to do that? And if you've been listening to enough of the naysayers out there, they will tell you that you cannot time the market. They'll tell you that there's no way to know when the market's going to go up, when it's going to go down. So you should just buy it and hold it forever. Well, guess what? Maybe they don't know, but I know, and I'm going to show you right now. Before we get there, I want to just briefly touch on the realities of the stock market. A lot of people never think about these facts before they ever get into a trade. And it is the bidirectional nature of the market. Here's the facts, folks. Stocks do not go straight up. They don't go straight up. In fact, a lot of stocks never go up or never go up substantially. The stocks that you buy and you're thinking, oh, this is a great company, it's really going to be wonderful. A lot of times they just go straight down. So here's the reality of the market. Markets go up, they go down, and they go sideways. All stocks go up, they go down, and they go sideways. And at any given time, they're doing one of these three things. Understanding that, we start to build a foundation for what we call basic market odds. We understand the market can go up, down, or sideways. That's one out of three directions, which means if you're buying a stock, you want it to go up, you're going to make money 33% of the time. If you just randomly pick a stock, 33% of the time, you're going to have a winning trade. Now, flip that upside down. That means two of those three, 66% of the time, your stock is not going in the direction that you want. Now let that sink in. 66% of the time, the stock is not going the direction you want, which means you have a 66% chance of being wrong. I know this. Wall Street traders know this. Now you know this. Why do I chuckle about it? Well, if you knew before you ever got into a stock trade that you had a 66% chance of being wrong, would you get into the trade? Would you have even considered the trade if you knew you had a 66% chance of being wrong? Or would you maybe have done some better quality analysis? That's your job. Your job as a trader is to do some analysis and determine when the trade is moving in a bullish direction, if that's your trade, or when it's not moving in a bullish direction. Or maybe if you're doing bearish trades, then looking for bearish trade directions as well. But your job as a trader is to do the analysis and determine when the trade is actually moving the direction you want it to go. So what if you had a very simple tool that would tell you it's time to buy or it's time to not buy? Would that be something that would be interesting? Of course, the answer is yes. And I'm going to share it with you. This is the simplest trading system ever. I've taught it for years. I've used it for years. And it's just so simple a caveman could do it. And it's called a moving average. And basically, here's how it works. When the blue line you see on the chart, that is the moving average. When the stock is above the blue line, when the stock is above the line, you buy. When the stock is below the line, you get out. You sell. That's how simple it is. See, I told you it's so simple. A caveman could do it. Stocks above the line, you buy. Stocks below the line, you get out. If you did that with this Meta trade on Facebook, Meta, whatever you want to call it, guess what? You would have made 111%. Isn't that crazy? It's not just this one trade. Take a look here at Netflix. When you're above the line, you buy. When you're below the line, you sell. You would have made all that profit during the bull trend, and you would have avoided all the pain during the bear trend. Let's take a look over here at Google. Above the line, you buy. Below the line, you sell. You would have made all that money in that big bullish trade from $65 all the way over to over $150, $145. And you would have gotten out at the top. So let me ask you, could you spend a little bit of time learning a system that tells you take the risk or don't take the risk? That's what this system does. It's so simple. You're above the line, you buy. You're below the line, you sell. You say, is there any way that it would have told us of the recent bear market? Could we have known at the end of 2021 that it was about to turn over and go bearish? The answer is yeah. In fact, we did know, and we warned everybody. Look, this is the Dow Jones Industrial Average. And look, in November of 2021, we started getting the warning signs as it was rolling over and it was moving below the moving average and telling us, don't buy, don't buy, don't buy. That could have saved you a lot of money if you had known that, right? Maybe you did know it. I don't know. But for a lot of people, they didn't know. And it could have saved them a lot of money. What about the S&P 500? Here's the S&P 500. Above the line, you buy. Below the line, you sell. You're in the trade. You're in the trade. We get to January of 2022. It says, get out. Now we're below the line. We're not going to be buying. Okay. What about the NASDAQ? Before the NASDAQ sold off 35% in 1 year, went straight down basically. We peaked in November 2021. We went straight up before we went straight down because that's the way the market works. Remember, markets move three directions, up, down, and sideways. So what we want to do is we want to time the market so we can get into the trade when it's moving up and we get out of the trade when it's moving down. That's what we want to do. And this is one of the primary tools that I use for that. It's called the moving average. When you're above the line, you buy. When you're below the line, you sell. And yes, it told us at the market top in January 2022, get out. And that's what we did. That's why my customers, my clients that trade with me in my profit picks on Sunday nights, that's why they were not as frustrated with 2022. It was a frustrating year for a lot of traders. There's a lot of whipsaws, other things as well that were, made it a little bit frustrating, but they're not suffering 35 and 40% losses like the average American during 2022. Why? Above the line, below the line. What if I made it even easier? We've done some work on this and we've come up with an even easier way. I actually worked with one of my customers to program a custom version of this. And let me show you how easy it can be now. What if we made it green and red? Oh, it's so easy. It's like cheating, isn't it? When you're above the line, you buy. When you're below the line, you sell. When it turns green, you buy. When it turns red, you sell. How easy is that to time the trade? We would have gotten into Netflix at about $530 a share, and you're out at $640. That's $100 a share when it's green, and then it avoided the pain of holding while Netflix went from $640 all the way to less than $200 a share. Take a look at Lulu. Above the line, it's green. We're going to buy the trade. You buy in about $320 a share. It tops out and turns red around $430. So it's $130 per share profit on that trade. And you avoided about a $200, not quite, sorry, about $150 per share bearish drawdown. Wow. Above the line, you buy. It's green. Below the line, red. You get out. You sell. What about on Tesla? One of our big ones. So much on Tesla. Now, we did bearish trades and bullish trades on this one, but if you just look at the opportunities on Tesla, take the green trade in the middle. That was the best bullish trend. You could have got in around 260, get out around 290, $30 a share. But you avoided when Tesla made the big bearish move. Why? Because you learned how to time the trade. And guess what? With a tool like this, it's so simple. It's almost like cheating. That's why I laugh. Whenever people say you can't time the market, I literally just chuckle. I'm like, maybe you can't do it. There's a guy here in Nashville where I live. He's on the radio. He's a financial planner. And He's always screaming at the people listening to the radio. I scream back. I'm like, why are you yelling at me? But he screams and he's like, you can't time the market. Don't try to time the market. And I laugh and I'm like, you can't time the market. I can. What if he came and he took my course? Wouldn't it be great? Hey, you know what? I want to give you a gift, folks. I have a couple of gifts I want to give you. I want to give you a trade execution checklist. That's the white thing on the left here. It's a little PDF that as soon as you click the link down below, get signed up. We'll email this to you. And I say you get signed up. I mean, all you're doing is requesting a PDF. You're not really signing up for anything. But it's kind of the step-by-step. Step 1 is pick the stock, and I go through the criteria for that. Step 2 is the analysis part. Step 3 is choosing the strategy. Step 4 is exiting the trade for your profit, and then your money management parts on that. So, yeah, it's just your trade execution checklist, and I'd like to give that to you as a gift. Also, I'd like to invite you to join me for the 3-day Trade for a Living Challenge. All you have to do is sign up. Just click the link, sign up, and it's starting very soon, depending on when you're watching this video. It's starting very, very soon. So get yourself signed up for that, and then that'll give me, if you'll give me the opportunity, give me 3 days to teach you a little bit more in depth some of these tips and tricks and techniques that we use to actually trade the market. Okay, so sign up for those. You can find them in the links below. And if you haven't done so already, like and subscribe to the channel so that we can make sure you get notified. You get all your alerts whenever we do new stuff, and then you can stay up to date with everything. All right, thanks for watching, folks. Hope you got a lot of great stuff out of this. And until next time, I wish you the best and happy trading. We'll talk to you soon.